Well, greetings, sailors. I am glad you're here with us on this new Navigare webinar. So lots of exciting things have been happening in the industry over the last couple of weeks. You may have heard that the BVI have announced that they're opening their borders beginning December 1st of this year. Very exciting. We're still waiting for all of the details on the opening, but expect to see you down there and love to see you at our new location. We've moved into Nanny Key Marina, the premier resort and marina in the entire British Virgin Islands. We're super excited about that. Some other companies were paring down their operations. We were outgrowing our Village Key location, so we're going to be operating out of Nanny Key Marina. Very excited about that. So the Bahamas, for those of you that have been following us closely, know that we just opened a base in Marsh Harbor in the Abacos. So the Bahamas are doing away with their quarantine beginning November 1st. You'll need to take a COVID test and head on down, get on your boat, and sail the Abacos. So we're opening our base December 1st. Love to see you down there. Have a great program today. As a matter of fact, we have more people requesting information about tax planning for our business than really any other request that we have. We're fortunate enough to have one of the foremost authorities in the United States regarding the tax laws and placing a boat in a charter fleet. So Giselle Alexander is a certified tax law specialist, a CPA, and holds a master's in law and taxation. So after transferring from a Big Four accounting firm, she transitioned into tax controversy. Those of you that have been audited know what that means. She was a member of the prevailing legal team for the landmark case Klein versus Commissioner. And this was the case that really established a lot of the ground rules on how the IRS views charter boats operating. So a wealth of knowledge, and she's here to share a lot of that knowledge with you and work with any of you that need assistance. So we're welcoming any questions you may have. If you can find the chat button right now, you may have to click on three dots and find that chat button. Find it now if you'd like to click it and say hi. Make sure you found it and get ready with any questions you may have. We're going to take about 15 or 20 minutes for the presentation, allow about 10 minutes for questions, and try to wrap everything up in 30 minutes. So before I introduce Giselle, I'd like to take a moment to talk about really the common types of programs that the owners are enjoying to increase their sailing time. So, increase their sailing time, generate revenue, plan the best possible tax strategies, or all of them. So most investors that are looking for the best tax advantages want to place their boat and have it in a business. And that's typically a charter revenue sharing program. So the owner of the boat gets the lion's share of the revenue, but pays for the day-to-day expenses. So there's some risk involved in that, which is good in the eyes of the IRS. Other people that don't really need or are looking for any tax advantages may want to place their boat in a guaranteed revenue program. So Navigare, for example, has typically for a mid-sized catamaran, a 9% guarantee. 9% of the purchase price will be guaranteed every year for up to 7 years. We also offer a plan that allows all of the owner benefits, sailing time, etc., at a lower cost. These are our Smart and Smart Holiday plans. So give us a call. We'd be glad to explain any of those plans to you. So right now, I want you to grab a pen and paper, take some notes. This is going to be some really, really good information. We're excited. And I think we might find out why grabbing a pen and paper right now is a really good idea if you're planning on starting a business. Here we go, start logging that time. So Giselle, I'd like to start off by asking you, um, first of all, thanks for taking your time to discuss the ins and outs of the tax implications of placing a boat in charter.
Oh, thanks
And
for having me here.
yeah. So I'd like to ask, as an expert in the field, you've been involved in this for quite some time. What are the most common questions that you get asked?
By far and large, there are 3 questions I'm going to be asked within the first 5 minutes of speaking with someone interested in purchasing a boat. And the first one is, are there really tax benefits to purchasing a yacht? It sounds too good to be true. I'm lucky enough to buy a yacht and the IRS is going to let me deduct it. How does that work? And the answer is yes, there are available tax benefits to purchasing a yacht. It's not necessarily you purchase a yacht, you deduct it. You're going to have to see various programs where you would qualify. You're generally looking at the depreciation, so whether it's a business, whether it's a second residence. But yes, you can legitimately deduct your yacht depending on the purpose. The second most popular question is, well, that's great, I can deduct it, but I've heard the IRS targets yachts for audits. Is this true? If I buy a yacht, if I deduct it, am I buying myself an audit? I really don't want the IRS knocking on my door. And the answer is that yes, yacht charter businesses do have a higher scrutiny from the IRS. And there's 2 reasons. One, anything that's involving something fun and expensive, whether it's a yacht, whether it's an airplane, whether it's a racehorse, if you can enjoy it and it costs a lot of money and you're using it as a tax deduction in part or in whole, it's going to attract IRS attention. That's just the way it works. But then the second part is that charter yacht businesses are very easy to audit. So it's a great first audit for new little IRS auditors. So even if your tax return looks great, still a good practice assignment. So there is a higher risk of an audit, but that doesn't mean it's bad. It doesn't mean you're doing something illegitimate. It just means you're more likely to have the IRS look at you, look at your business. The third question that then I get asked, so I'm more likely to be audited. If I lose, am I going to go to jail? Most likely, no. Most IRS audits do not involve jail time. The threshold for an audit to be criminal is very, very high. You have to be willfully committing a criminal act. And the standard of willful means it has to be intentional. You have to have taken affirmative action. So if your tax audit is going criminal, it means you were hiding cash under your bed and not reporting it. You were doubling your expenses even though you weren't paying them. You were going out of your way to do something bad, not you started a business and maybe did not follow, 7 of the 9 steps to document it, or your boat capsized and you lost all of your bank records. How are you going to prove your audit? Things like that are not criminal. They're unfortunate and you just have to work your way through them in an audit. So most likely you would not go to jail if you somehow do not comply with every single regulation.
Interesting first questions that you get asked. So I'm glad we have you here to answer a lot of questions to make sure that people can help set their businesses up in a way that helps them resist or be able to stand up to the scrutiny of potential audit in the future, and nobody's going to be going to jail. We do have quite a few questions. I'm very, very happy with all of you that asked questions before when you were registering for this. Let's go through a few of those questions. Amanda?
I have one for you, Giselle. Who is the best candidate for placing a yacht in a charter fleet as a business and taking advantage of the tax laws?
So the first part of that question, best candidate is someone who, 1, wants to own a boat, and 2, wants to run a business. and has taken the time to put a little thought into that. It's very easy to get carried away at a boat show or on your friend's boat and think, I love this, I want my own boat, I want to run a business, and not stop to think about all of the steps, how the cash flow works for buying the boat, how the work will flow running the business. So take some time, talk to some people, figure that out. Once you're sure you want to do it, then the next best person is going to be a variety. It can work for a variety of people. If you are someone who is in the process of retiring or selling off an existing business and you're going to have a large amount of income in a year, that can be a great year to start a new charter yacht business because you can take the depreciation deduction. You'll have a big loss that first year, but you can offset it against the other income you're getting from the sale of the business. So for tax purposes, that's good. But then also for purposes of starting the new business, putting in the work to get it up and running. A lot of people, if they've been very successful in a prior career, aren't ready to just do nothing. They want to slow down in an interesting way. So this is a great time to take on a new business. Also with your charter yacht business, because you only keep the boat in service for a few years, it's not a huge commitment. If you try it out and you decide it's not for you, you know, it's easy entrance, easy exit. So I think it works for a lot of people.
Okay, thank you.
Thank you, Giselle. Why is a business plan so important for someone entering the business?
Thanks, Joaquin. That is a great question. The business plan is something a lot of people, more or less, when we start discussing it, they'll outright tell me a business plan is dumb. I've made millions doing this other business. I didn't have a business plan. I had an idea and I made it work. Why do I need to spend time and money on a business plan? And there's a couple of reasons. The first is it's very key to an IRS audit. It's one of the first documents they look for. They expect it to be there. And then if it's not there, not only do they write it up in the audit, but then when you go to tax court to challenge your audit, tax court judge is going to wonder where the business plan is. There's a case out there from last year, the Steiner case, where if you read through the case, they talk a lot about the fact that they had no business plan, which makes it more of a hobby. But then just from a general business perspective, especially if you're new to owning your own business or new to the industry, going through the discussions with your CPAs, with your charter broker, with your management company, with your attorneys, helps you come up with a plan to be successful. Make sure that you are making money. Make sure that you are spending the right amount of time that you plan to.
Thank you.
Great. Next question is it safe to say that if a business is consistently profitable, there is a lower risk of an IRS audit?
That's a great question. Being consistently profitable is a key factor when you're being audited, when the IRS is trying to determine if this was a true business or just a hobby. It won't necessarily prevent you from being audited for one key reason, which is the business is only one part of your tax return. So if you've got other streams of income, residential real estate, maybe you're still partially working in another career, all of those items could also trigger an audit. Maybe you made a large donation or a easement or something like that. So being profitable, having a business plan won't guarantee you won't be audited, but it will do, what it will do is better protect you in an audit. We internally sometimes call it IRS proofing. We're trying to IRS proof you from the beginning so that if you do have an audit, it's more easy, it's more painless, it resolves faster. So being profitable is certainly one key characteristic.
Okay, and as a follow-up to that, how should an investor structure the business as they are getting set to move forward?
Great question. That is going to depend on the individual themselves. So they're going to want to look at their other sources of income, their other losses, what other plans they have in place for asset protection, for other things they may own, what their estate planning looks like, and how they want this business to fit in with that. Most frequently, we see people start up an LLC. This is the primary asset they put in it. They separate it from their other businesses and make what's known as an S corporation election. But that's not always going to be the right answer for everyone. Some people have an existing business they would like to expand. We've got one client who has a charter airplane. He'd like to make a joint business with his plane and with his yacht. So in his case, we'll be doing something different. It's different for every individual.
That makes sense. Okay.
Giselle, now I have a question from Mike. Depreciation seems to be the key for tax planning benefits. Can you tell us how much depreciation I can take in a given year? Are there special rules, such as Section 179, that can help maximize my benefits?
Yes, another great question. So depreciation absolutely is one of the primary tax benefits, especially if you're using your yacht as a charter business. For 2020, the 179 deduction limitation is $1,040,000. So you can get a very large deduction. It can cover, quite a variety of yachts could be covered by that. Key to determining how much of that you'll actually take, because then you've also got bonus depreciation, which you can layer on top of that. So if you had a $1.2 million yacht, you could take the $1,040,000 of 179, then take the difference, the 160 in special. But it's going to depend on your other income and expenses. Special depreciation requires profits to offset it. So if you're looking at a loss your first year, you're looking at the 179, you're not carrying over into special depreciation. You're also looking at your other assets, what you're depreciating, what your equipment is, to determine for you personally how much you can depreciate. So you would want to speak with your CPA, your tax attorney, maybe do a joint meeting with all three to figure out the best way for you to depreciate your purchase.
What about recapture?
Recapture is coming. Unfortunately, there is no way around it. Even if you do not depreciate your asset, the IRS will recalculate your recapture as though you did. It's very interesting. Recapture is standardized based on the standard lifespan. So no matter how you depreciated it, it's going to get recalculated. The good news about recapture is that the income tax rate on that portion of the gain that falls under recapture is capped at a 25% rate, which has historically been lower than many of the other tax brackets. Obviously, we don't know what's to come with future tax rates, but assuming they go up and are exceeding 25%, there's still going to be some tax savings there. And it's just going to be allocating a portion of that gain back to the depreciation recapture.
Interesting, thank you.
Another question is, does the Navigare yachting program offer the structure that is necessary for a qualified individual to take the depreciation deduction?
Good but complicated question. So when looking at your depreciation, you're going to look at a number of factors. So you're going to look at your Navigare program. If Navigare is doing their part, operating under the contracts as agreed to, the structure is agreed to, then you've got that piece in place. So then you have to look at your own actions. If you have depreciated your yacht on the basis of you're in an active business, then you have to make sure you were actively managing your business. You're going to want to look at the hobby loss test. There's 9 factors. Make sure that, you may not meet all 9, but that you're meeting more of them than you are not, and that you're keeping good documentation. So it's a team effort when it comes to supporting the validity of deductions.
Okay, that's a good one. Good to know.
All right. So that's pretty interesting. Yeah, we've tested ours. They look good, and we've never had an issue at an IRS audit. We got a question from Phil. It's a pretty long question. I'm gonna paraphrase it a little bit, but can in a nutshell, with a guaranteed revenue program, what can I qualify for tax deductions?
So again, going to depend on your individual factors. When we're looking at the active business, you need the risk element. So it's obviously going to be more difficult for a guaranteed income type program to fall under that, that structure. However, maybe you want to operate it as a vacation rental. Maybe you want to use it as a second home. Maybe you want to use it as a primary office. You know, depending on what you want to do with it, there are probably some tax benefits out there you are eligible for. So that would be a discussion to have with your CPA, with your attorney, and figure out a plan that works for you.
And that's basically Section 173, the hobby rule, is going to come into play for a guaranteed revenue program.
For any type of business use, even if it's just partial vacation use, yes, the IRS is going to look at the hobby loss factors. Again, that's a really easy audit for newer auditors. So you see them apply it to any business that has an element of fun. And that's an actual term they use, as an element of fun. And certainly boats qualify as fun. So they'll be looking at those factors to see if you were running your business activity as a business, even if it is just a partial side business, not a primary, not an active.
Okay, Joaquin, you have a really good question from Senjin.
Yes. Do you have any advice for a sailing instructor?
Well, I could come up with all sorts of advice for a sailing instructor, but I'm going to guess you would like some tax advice, and probably more relevant towards what we saw with the Klein case. One of the reasons that case had such a favorable outcome is because of how personally involved the Kleins were with their business. They weren't just trying to track their hours and get to the active management. They really wanted to be very hands-on. They wanted to be on their boat. They wanted to be interacting with their clients, which is great. It makes it very easy to document active management. The primary advice I think I would have is definitely keep good records. Sometimes it can be easy because you are so busy doing so many jobs to not track your hours, and you assume it's obvious that you're actively participating. But it won't necessarily be. That's also a reason to pick a good team. Pick a good charter management company that is going to keep track of their staff's individual hours to make sure that no member of their team is spending more hours than you. Those are probably the two key pieces of advice I would have for a sailing instructor.
Yeah, great. And because of that, Navigare actually went to a digital platform. So every bit of maintenance, every time a debriefer is on the boat, we'll log all of that into a system that our owners can look at and keep track of the hours by everybody who's worked on the boat. If a water pump was replaced, they know who did it, and so we have an accounting record at their fingertips. There's never any searching for any information. It's also been a great boon to us to keep our boats in excellent shape. And we are caring for million-dollar assets, and it's important, I think, to maintain them in a very transparent manner and in the best possible manner as well.
Well, and I love hearing that it's electronic so that we don't have to worry that someone has lost it. You know, an audit happens years later, may have sold the boat, be trying to find your records, and you've got it stored in one place, easy to pull up, easy to provide. Warms my little attorney heart.
The caveat is it's BVI internet, Bahamas internet, but it's all on a server in Sweden, so we're good.
All right, easy but slow.
Right.
It beats the old form of putting the note in a bottle and shipping it across the sea.
That is true. The next question is from Jared, and he asks, what portion of trips to your boat can be expensed if set up as a business, such as airline tickets for family and friends, dinner and drinks, things like that?
Great question. So with respect to family and friends, you're not going to be able to deduct their expenses unless they are actually employed in your business as well. So for a husband and wife, if they've divided up their job duties, that's going to be easy to deduct both of their airfares, their meals, because they are there working. Friends and family, no, generally not. Maybe if you are doing a test launch to make sure it's seaworthy, make sure it's comfortable before you have any paying guests on there, you may be able to deduct some of the food expense, some of the costs of having them on the boat to try things out, but you're not going to be able to fully deduct everybody's airfare, can't have a big party on the boat and make it a tax deduction that way.
Understood.
I have a question from Joan. Can you sell your first home without paying capital gains if you put the money in a boat you will be living on, or if you put it into a charter fleet?
So I'm going to give a qualified maybe. That's a complicated question. You're going to have to look at how long you lived in that home you've sold, how much you're selling it for, what your basis was. Then you're going to have to look at the price of the yacht. So a bunch of numbers are going to come into play. That's something you'd want to meet with your advisor about with your documents so they can truly run the numbers and give you a scenario.
Okay, we have a couple of questions that have come in over the time, and we've got a few minutes left. From Alan, I have passive income from farm cash rental. Would it be easier for me to just treat the boat rental income depreciation as passive losses, which then would just offset the passive income?
So for Alan, again, I'm going to say a maybe. That absolutely might be the best scenario for you. You would probably want to evaluate over the next few years. Are you expecting the farm to continue to have losses? Is it possible it will have some income? You'd really want to run the numbers and get some projections and see which way is going to make the most sense for you.
Okay. And from Roger, you said LLC and then you said S Corp. These are two different things. And yes, I'll state yes, they are. And I believe, Giselle, you mentioned that either could be acceptable.
So the S Corp is an election you make. So the LLC is your entity. So you can form a variety of entities. You can form an LLC, you can form a partnership, you can form, a single member sole proprietor company. But the IRS has a form where you can elect for your entity to be treated as an S corporation. So the scenario that I was discussing that we see most often are people form the LLC because it is cheap to form, but then it provides good asset protection in a number of states for separating their business liabilities from themselves personally. But then they want the tax benefits, so they make an S Corp election. So there's a little bit of layering of entities and elections.
Okay, so it's not, at some of the boat shows, I know I've seen some seminars that tend to imply that it's a one size fits all, just sign here and everything's going to be good. It sounds like that may not be a perfect representation of how the IRS looks at our businesses.
Not only the IRS, but also for the individual. We all have different goals, different needs, different income sources. So we like to look at our clients' entire picture, not just their charter yacht. We don't want to make a decision that's good for the yacht business that then affects their other business or deductions negatively. So it is it's very collaborative with their other professionals and advisors.
Yeah, yeah. Well, that's interesting. This question is from Bob, and my accountant is not too sure about how this works. Are you able to get on a call with us to explain all of the implications to me and my accountant?
Absolutely. We are happy to, have a conference call or Zoom and answer your CPA's questions, give them the level of comfort they need. Sometimes they just want to speak with us, understand a little more about the Klein case, the Steiner case, what's out there. Sometimes they're very conservative and they would like a memorandum or an opinion from us where we clarify that we are providing the tax advice and they are just preparing the return. And we're happy to, provide what that CPA needs, what the client needs, and all work together to make sure that the client's compliant, well taken care of from a tax perspective, but that all the advisors are comfortable and agree on the strategy as well.
Okay, is it, so if I'm hearing you correctly, if somebody is potentially working with us and they're taking all their tax advice from me, that's not a very good plan?
We generally recommend people get tax advice from a qualified tax professional.
Yeah, good.
CPA,
Okay.
tax attorney, someone who's got some alphabet letters behind their name.
Okay, all right. And the follow-up to that question is, what kind of additional support can you offer? Can you refer a CPA? Can you help with the formation of the LLC or the corporation? Can you help with the business plan?
Absolutely. We are here to make our clients' lives easier. So if they want us to do the initial startup, get the entity formed, we can do that. If they want us to talk with their estate planning attorney to make sure we're forming this entity in a way that meets their estate needs, we can do that. It's very, very collaborative. Some people are just going to need a business plan. They can form their own entity. They've got their own Excel spreadsheet to track their hours. Other people would like, worksheets from us for not only tracking hours, but giving them a list of items that qualify so that they know what they should be recording, how they should be recording it. And we can work with their CPAs. We can recommend CPAs. It's whatever that client needs to be successful.
Wonderful. Well, we have run over our time. I've never been able to hold one to 30 minutes. I'm still trying, but so Giselle, it sounds to me like there are a lot of tax benefits for somebody who does qualify. And while we were really only able to answer some of the most basic questions, as we heard, the structure of putting a boat in the business really isn't a one-size-fits-all and needs somebody to help tailor the business to the investor's goals. So Navigare can provide everything on the technical side that you need to run the business, including some of the highest returns in the industry, the maintenance program with everything online, a great holiday program that allows people to sail around the world. They should probably be talking with somebody for legal and tax advice before they move forward completely. I just wanted to say that we have everybody's email address and name on that attended this webinar. We're going to provide that to Giselle's firm. And so for anybody that registered for this webinar and ends up buying a boat and putting it in our fleet and signing the contract this year, we're going to pay for 2 hours of legal time with Giselle's firm. So super happy about that. Look forward to helping you with your with all of your sailing needs. I can't wait to get sailing. I can't wait to get sailing. I can't wait to get sailing. I'm glad the bases are opening up. For those of you that want to charter, we've got a really cool online charter, charter auction webinars going on every Wednesday night. So follow the bit.ly Navigare Auction. We'll put that in the recording if you want to download it, if you didn't write it down, but bit.ly/Navigare Auction. And we've got some crazy charter deals going. Our next webinar is in 2 weeks, and it's Cruising the Abacos. Many of you know that post-Dorian, a lot of Marsh Harbor, the Abacos were pretty torn up. So the family that writes the cruising guide every year, they've got a lot of post-Dorian information. They're right now updating their cruising guide. We've got that webinar coming up October 22nd in 2 weeks. So on behalf of the Navigare team, I'd really like to thank Giselle and the rest of our team and all of you for attending. We look forward to speaking with you about how we can help you get your boat in our fleet and getting out sailing. Thanks again. Bye now.